Time now for the markets with Leighton, and cotton futures have rallied despite enormous world stocks, you say.
That's right, Artis, and we'll be sharing one trader's strategy between now and that prospective plantings report in March. Also ahead this week, challenges continue for farm-raised catfish. A little downside in feeder cattle prices is forecast in the short term as the grain trade watches the weather in Argentina. The latest snapshot of the U.S. catfish industry was rolled out Wednesday afternoon. The figures reflect what was happening in the month of January. Last month, producers received a pond bank price of 81 cents per pound. That is 42 cents per pound under what was paid 1 year ago. Farm sales totaled 29.5 million pounds round weight. That is an increase of 14% from December. Processor sales were an even 16 million pounds, an increase of 19% from 1 year ago. Extension Ag economist Dr. John Michael Riley sums up the state of the catfish business pretty simply. He calls it an industry in decline. And he's not just talking about Mississippi with that comment, but the U.S. as a whole. Here's that interview. John Michael, we're in a new year now. Has the picture changed at all as far as farm-raised catfish?
It is not. It's still an industry that is in a state of decline. Nationally, water acres in the U.S. down 7%. Here in Mississippi, down 5%. It's 48,600 total acres, in catfish farms. There's no plans for Mississippi producers to do any type of new construction of catfish ponds. A few may be renovating, but for the most part, it's just it's still in this state of flux in terms of people really exiting because costs are so high, and then we have seen a depression of prices over the past number of months.
And again, one problem, the processor inventories remain very high, right? Especially when we talk about frozen product in particular.
That's right. It's one of those. It's not really moving off the shelf like they would like for it to see. We did see total inventories decline in the U.S. down 8%, weight down 5%. So because of this reduction in acres, the total number of available supplies is going to be declining, but there is still a bit of a stockpile from a frozen standpoint.
As far as the price picture, the pond bank price that catfish farmers actually receive, is that likely to change at all in a positive manner as we move ahead here?
Thinking about the reduction, it could benefit prices once this kind of glut of supply moves along. But for the most part, prices declined pretty rapidly in 2012, ended the year with an annual price of 97.6 pounds or dollars per pound versus $1.17 per pound. So there was a fall off in prices, which led to the reduction in acres. But if the supply does start to dwindle, that could be positive for prices moving forward in 2013.
And obviously, too, I guess the competition from imports, other products, if that could be handled somehow, that possibly could help the picture.
That would always help, right? It's not a big issue elsewhere in the United States. Here in the South, it is something that could be benefited from.
Mm-hmm. So the industry continues to look for some solutions and trying to take some steps that will move this in a positive direction.
And lower corn and bean prices will always help as well.
But the outlook there is not necessarily good at this point either.
Not right now.
The USDA released its cattle on feed estimates Friday afternoon, the 22nd, after the markets closed. Analyst Jamie Kohaki says the fact that bullish reports so far this new year have failed to pull the market forward indicate the beef sector, as he says, is technically tired and weak.
We only got 1 day of spillover off of each report, and for as bullish as those reports were, that's very, very disappointing. And I think that's what scared somebody. I was like, we get 1 day, get me out. We'll correct and I'll buy into it again later. I still think there's another dollar and a half down in the feeders. Just technicals, I think, going to go down and retest the recent lows. We're so close to it now, why not? And then start back up again. Longer term, I think we're fine. We're just flushing everybody out right now and then starting pretty much back over again.
It's official now. U.S. milk production set a record in 2012, over 2% higher than the previous year. The nation's dairy herd was the largest it's been in 4 years in 2012, according to the USDA. Production per cow has increased an average of over 15% in the last 10 years. Our trivia quiz this week deals with agricultural aviation, and here is the quiz question. If you're using aerial application, forestry herbicides must be applied by what type of aircraft? Is the answer A, fixed-wing airplane, or B, helicopter? You'll find out in a few more minutes. There was no real new fresh news for corn at midweek, especially from the export side of the market. The nearby supply does remain very tight. Analysts are said to be watching weather in the western Corn Belt and Argentina while they await the monthly USDA numbers that will come out in March. The supply and demand estimates will be released March 8th. In the soybean sector, analyst Virgil Robinson says that bean prices themselves are not too high, but he is of the opinion that prices for some of the products made from those beans, specifically soybean meal and soybean oil, are too low for the market right now.
I think the prospect for increased soybean oil usage to produce biodiesel in the next several months is very strong. Soybean meal exports have been very strong. If processors take to heart the lack of profitability and reduce their processing capacities, the availability of those two products is going to be significantly smaller. And as a result of that, be advised, if you're a user of each of those two products, that possibility exists, and you need to manage the risks associated with that.
As reported on the website agfacts.com, the Doane Cotton Commentary is advocating hedge protection. Doane says futures have rallied well even in the face of the big global cotton stocks. The analytical firm also says the market is setting itself up for a bearish reaction to the upcoming March 28th Planting Intentions Report. They say all the talk about a huge drop in cotton acreage coming this spring could actually convince some farmers that they shouldn't cut back so much after all, and that could create a surprise in those March 28th numbers when it comes to cotton. Well, before this week's new feature story, the trivia answer is next, and that answer this week is B. By state law, forestry herbicides must be applied by helicopter if aerial application is being used.